Hi YouTube, please give me a moment while I go live on Facebook. I will be getting started in just a second. And I think we should be live on Facebook. Hi everybody, welcome to another episode of the Strategic Swing Trader. I hope you're doing well. I normally do this video on the weekend, but with today being a holiday, we're doing it on a Friday. So hope you're doing well, and let's go ahead and get started. Before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, I'd like you to know that I put together an amazing free ebook if you'd like to check it out. We talk about tools, tactics that I actually use every single day. So feel free to download it. It's totally free. Link is in the description. Okay, link is in the description. With that said, let's turn on the charts. Let's take a look. I think this is the charts. Okay, there we go. If you find benefit in today's video, I'd really appreciate it if you hit the like button for the YouTube algorithm. That helps me out a lot. And if you have any questions, reach out to us, info@t3live.com, info@t3live.com. What I will do today, as always, is review the market and then go over some swing ideas with you. So first, the market. The market had a chance to turn bearish a couple of times, here, there, and as you can see, the uptrend stayed intact. We actually, pulled back, made new highs, pulled back, made new highs, and right now we're at a new high. And do we pull back just like we did here? Do we pull back just like we did here? Maybe. We might get a pullback next week, but the fact of the matter is, this was the first top right here was a really good shorting opportunity, but it failed. The second top, because it was a breakout failure right here, a breakout to new highs, and then we took out the low of that breakout bar. That was also an okay, not as good as the first one, but a decent opportunity to short. And in both cases, I shorted and I had to cover. Otherwise, I would have gotten stopped out. And now this is not as good of an opportunity because it's not. I wouldn't say it's kind of a breakout failure if we take out the low of that bar. If we take out the yesterday's low, Thursday's low, it'll be kind of a breakout failure. But it's not as good as the first two opportunities here. So the uptrend is probably going to remain intact for a while, and if we pull back at all, we'll probably continue higher. So that's my expectation That's my expectation for next week. I'm not expecting to see a break of the uptrend. We had a couple of decent shots, and neither time worked. Okay, based on if we look at the larger time frame of the Qs, usually when you're at a top, you get the largest bar at the top, not the smallest bar. And as you can see, the largest bar is at the bottom. For example, here, up, 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 and then we got the largest bar. That was the top. For a while it was. At the beginning of 2018, we dropped a good amount. We dropped at least 10% before continuing higher. Notice this green bar was probably the biggest also on the way up, led to a top. Over here, we have the opposite. We have, wide range green bar starting the move, then smaller bar, and we just started the month of July, so that's why it's still a small bar. But my point is, I am thinking that since the market is failing to pull back at all, that we will get a climactic top, meaning we will accelerate and go climactic, similar to how we did in the year 2000. Okay, so this is the tech bubble right here on the monthly chart of the Qs, which led to an 83% drop. 83% drop in the Nasdaq between I think it was March 2000, March through end of 2002, 83% drop. So I'm thinking that's what we're probably going to end up getting if we can move up the next few months without pulling back. Without pulling back. If we pull back, then it will not create that climactic acceleration, that parabolic acceleration to the point of exhaustion. So again, we had a couple of shots, a couple of chances to come in. The market did, and it failed. So if we can continue higher, I think we will put in a blow off top. Okay, this is still, we're still far away from that, so we'll see. But for next week, we could easily pull back, because just like we did last 2 weeks, though, you know, we would need to at least at a bare minimum take out 251.70 to experience some kind of a pullback. And I'm not predicting the break of the uptrend. Okay, last 2 times I thought maybe. This time I don't think we will be breaking the uptrend. Okay, so if we pull back, it'll be actually an opportunity to play long. I think I have, so hold on. I have 15 different positions long, okay, in my trading account. So I am not necessarily looking for a pullback. I don't really want to get a pullback, but again, if we break 251.70, we might get a pullback, okay? All right, the SPY, the IWM, the diamonds, very, very different picture, very sloppy. It's the technology companies that are leading on the way up. Without the FANG stocks, we would probably not even be in an uptrend, because the FANG stocks, or actually just the biggest 5, Microsoft, so it's not just the FANG, it's also Microsoft. So Microsoft, Apple, Google, Facebook, so Microsoft, Apple, Google, Facebook, and Amazon. These 5, not including Netflix, these 5 account for 46%. Last time I checked, that was like a month ago. They account for 46% of the NASDAQ, for 21% of the S&P 500. So imagine if we didn't have Microsoft, Apple, Amazon, Google, or Facebook, we would probably be in a downtrend. We would probably be flat at the most. So that's what's been driving the market up. And now we have Apple and Microsoft, for the first time ever, 2 $1.5 trillion plus companies. Both of them are now valued at over $1.5 trillion. Amazon is right behind at 1.4, right behind. And then Google at almost 1 trillion. And then Facebook at 650 billion or so. So without these 5, especially the top 3, we would not be where we are today. Normally, whatever leads the market, the largest component of the market also, is the one that crashes the hardest. So if we do get that blow off top, which I think we will get, barring any pullback, right? If we don't get a pullback and we just keep printing these big green bars on the monthly chart, I feel certain we will get a blow off top similar, maybe not as severe of a drop, to the blow off top we got in the year 2000. So again, if we get, and look at the chart, I mean, look at the move here. This dwarfs whatever move we got during the tech bubble. I mean, this is 10 times as big. And this is Microsoft, but it applies the same to the NASDAQ. It applies the same to Apple, to every other stock pretty much. The last decade or so, it dwarfs what we got during the tech bubble. Now, this is what I was going to say, is the largest component of the market usually crashes the hardest. And it will not be the one to lead it out of the recession. When we bottom, because the market always goes higher over the last 100 years, after every recession we get a boom, right? It will not be the sector to drive the market back out of the recession. Now, one can argue that the normal boom and bust cycle is over, because the Fed has proven to be able to intervene at a magnitude, at a scale that is big enough to actually lift the entire market. And if that was your argument that we're never going to have a crash, then I would say maybe. I think it's inevitable that at some point we'll crash, and yes, the Fed will come in and try to fix it, just like they did successfully this time around in March, right? But you might be right about the normal boom and bust cycle, you know, boom and then a recession and then another boom, that we're kind of, that the bearish cycles might be very, very short-lived going forward. I don't know for sure. Who knows? Nobody knows really. But if the Fed continues to intervene, manipulate, pour so much money into the market, use any words you want. In fact, they're now buying corporate bonds. It goes against their charter, meaning their bylaws prohibit the Fed from buying corporate bonds, and they're doing it anyway. So I feel like they're big enough, strong enough, have enough ink to print enough money that they can actually stop any recession. But we'll see. Only time will tell. What's exciting about the market is two things to me. One is, if you know what you're doing, you should be able to make money in bullish and bearish markets alike. So it doesn't really matter. The market is fascinating to us because we're traders. We like to predict, analyze what the market is going to do. It's also, of course, it's important because you can position yourself better if you knew which way the market is headed. But I think the exciting things about being a trader is, one, there's many different things, but one is you can make money in bullish. You should be able to make money in bullish and bearish markets alike, because it's you buy or sell, short or go long. That's it. There's no other action to be taken. And then the other thing about being a trader that's exciting is that even though we only have two directions, up and down, right? You can only go long or short. It's still different every time. It's always different. Does that make sense? So, for example, the last bear market, the last sell-off in March, that was really different than anything I've ever seen. This last bull market, also this run-up that we're having right now, we're experiencing, is different than anything I've ever seen before. And I traded during the last recession, 2007, 2008. I was already a full-time trader back then. But this is different, and for sure feels different. So it's always exciting, for sure. And that's what I like about being a trader. Of course, there's so many other advantages to being a trader, but we all know it. I don't need to reiterate that. The freedom, right? The fact that it's a puzzle. It's like you're always trying to figure out, what's yet to come, right? It's never boring, basically. The fact that you can do it from anywhere you want. My girlfriend and I were talking just yesterday about possibly going away for a month or so, and I said I can easily take my setup with me, just to trade, to go somewhere else and live somewhere else for a month or so, just for fun. I can do that, being a trader. Not have to answer to anybody. But you know that list. I'm not gonna go down the list of the benefits of being a trader. But to me, the most interesting thing about one of the best things about it is that it's never a dull moment. Sure, there are some bad moments sometimes, where you lose money some days, or you have you have a hard time with some trades or something like this. That's fine, but it's never boring. I never have any issues with being bored, which is nice. People say, I often hear this, that good trading is boring. Pfft, you kidding me? It's never boring. Good or bad, it's never boring. At any rate, let's go ahead and go over the list for... Actually, I'll just go ahead and go over USO. USO looks good. I went back into USO yesterday on Thursday. Small size though, smaller than the last few times that I went in, because it's not as good. I played USO probably no less than 5 times. long, the breakout, the breakout, the pullback, and then last time here, I think this was last time, and then I trailed out. And so I just went back into USO yesterday, but again, smaller than any of the other times because it wasn't, I don't think it's as good, but as long as we're hugging the moving average, I think we're okay to move up to the next resistance area, which as you can see on the daily chart, it's around 40 bucks, okay? So USO I like higher. And gold, we talked about gold last week in last week's video. It's pretty good. I mean, I have 1 or 2 gold stocks in my portfolio, so we'll see. So gold looks good still. All right. For those tuning in, we're just gonna go over some of the watches for Monday, and then bullish and bearish watches. If you instead of having to type them up, I dropped the list in the description of the video. So feel free to just go to the description of the video, copy it, and paste it into your own platform, into your own watch list. Okay. So here's the list for Monday. So first, APTX. Check this out, guys. This is a long-term breakout. I like it a lot. It's breaking out over almost a year and a half worth of basing. You might say, well, what about this? Should we worry about this little base? No, that's really old. I'm not worried about that. As soon as we take out this bar's high, I'm okay playing long. Don't have to wait for it to clear $6. That's the top of that old base that I showed you. So I like the APTX a lot. It's a little thin, but I like it a lot as a long-term play. APTX. ATVI is a 1, 2, 3. It's a breakout, right? It broke out on Wednesday. Thursday was the narrow range bar, and then tomorrow, or on Monday rather, if we take out 79.11, looks higher. Okay, so what it is I share with you my list, my favorite watches for Monday, bullish and bearish. I don't play every single one of them. I play some of them. I select the best of the best, basically. Those are all good. Whichever ones trigger, I think, are all good. But I can't play every single day. I can't play, what do we have here? That's 8, that's like 11 longs, and let's say 10 shorts. I can't play 20 different positions every single day, because every single day I generate a new watch list. So I pick the best of the best. You have to be a subscriber to know which ones I am picking myself for my own account, but if you are, you can log on to your account right now and see. I already updated our shared spreadsheet. I already updated that, so you can log on and check for yourself to see which ones I will be playing myself on Monday. So I like a lot of these, and I'm going to be playing a bunch. And so as long as the market doesn't roll over, then a lot of these will trigger, okay? So ATVI looks higher. It's not really one of the ones that I picked for my own account, but it does look higher. A BGS, check this out, guys. Would you say this red bar was bearish? This breakdown bar was bearish? I would say so. Really bearish. It broke a long-term uptrend. Okay, very bearish red bar, okay? But what happened here? Did the bearish red bar produce any follow-through? Absolutely not. The stock went right back up, negated that red bar, and is basing at the top. Plus, you got the rising 20 MA. Where is it going? You tell me. Where is it going? So if it breaks above the base, it's going higher, okay? So I like it higher. I like the BGS higher. It's a little thin too, BGS. Blue is also thin. I've never heard of the stock before. When I was scanning this weekend, I found it. I like it a lot. It's also a long-term breakout. Check it out. Over the base on the weekly. Look at the monthly. I mean, this is a rocket ship. Look at that. Amazing. Looks higher to 25 bucks. So I like it a lot higher, but it is a little thin. CORT is good. Only issue with CORT is that it's up a lot already. And as I said earlier, if you're up a lot and you get a wide range bar, that's often the top, right? At least the short-term top. So, but over this base, stop under it, and then if you look at the monthly, I mean, that does look higher on the monthly chart. Check it out. See it? So it looks higher to 25 bucks also, just like blue to 25. So I like it as a long-term play. CPRX I also like as a long-term play. it's a little sloppy, but it's a monthly buy setup. So this is a pullback to the rising 20 on the monthly. So target should be 6 and then 7. Targets 1 and 2. Here's the daily. So the entry for this would be over the base. Since it's a long-term play, I wouldn't put the stop under that doji bar. I'd put it under the entire base. So give it a little bit of room so that you don't get shaken out if it's a long-term play, which it is. CPRX. EQIX is like ATVI. It's a 1, 2, 3. It broke out on Wednesday. Thursday was that red bar, and then if we take out the red bar's high on Monday, then that constitutes a trigger. An entry long over 736. Stop 716. Wow, that's an expensive stock, isn't it? I didn't even realize it. I don't scan based on price. I just scan based on chart pattern and volume, liquidity. So let me just see 1 second. So I like the EQS. 1 second, sorry about that. Just okay. So I like the EQIX higher, just like the ATVI. GILD, I played the GILD and it gapped up over here in me, and I took half. The back half wasn't as good because I thought it would go back up, and it wouldn't, so I had to get out of it. But this was a nice winner for me back in April. So now, do I want to get back in? It's the sloppiest stock in the entire country, for sure. But check out the weekly. No, first, the daily looks good. It's right off the 20 MA. That's good. The weekly is a weekly buy setup. It's incredibly sloppy, for sure. A lot of red, green, no continuity. And check out the monthly. The monthly broke its downtrend, which it was in a downtrend from the middle of 2015 through the end of 2019. That's 4 or 5 years, 4.5 years. And now it broke the downtrend, has a pullback, so I like it back to 120. Maybe Gilead will be the one to come out with the vaccine. Okay? I am focusing heavily on biotech stocks because a lot of them are just exploding. So I like the GILD higher, but because it's so sloppy, I wouldn't even normally. I would give it to here as a stop, entry right here, stop under. But in this case, because it's really sloppy and it's a long-term play, I'm gonna give it to 71.95 under the entire base is where my stop is gonna go. So the stop goes here, and then entry would go right here. Okay. And if it doesn't trigger, then no harm, no foul. Okay, so I would just keep watching it until it triggers, or if it fails, then I wouldn't get in it. HTBX looks higher to me. Entry would be over this bar's high, over 90 cents. Stop would be under 81. About a 10-cent stop. Weekly breakout and monthly breakout also. HTBX. ICPT is kind of a unique play. I honestly don't like the hourly very much. You see how the 20 MA is not under price, but it's going through price. I like it when the 20 is under price. We had the XERS yesterday, and it gapped up a good amount, but notice how the 20 was under price. So that's how I like it to be. So this one, the 20 is not under price, but I think it's worth a shot. Long right here over 47.25, stop under the lows, and then target would be 57, which is this pivot right here. So under this pivot at 57 bucks. So that's $10, almost $10, $9-10. So I like it higher. And then last but not least is the PRTX, and it's also a breakout over 530, I believe. Yeah, 540 actually, over 540 long. And then let me just see something. Yeah, over 540. And then weekly, look at the weekly transition A. So transition A means is you have that 4-stage cycle, the boom and bust. And so we've had the bust, and now the stock is starting to maybe break out and boom and go higher. So that's what I like about it, is the larger time frame looks good to me. The weekly, the monthly. Okay, pharmaceutical also for the right sector. So I like the PRTK over about 542. The shorts, not as good, always not as good right now, because they haven't been as good because the market is just simply too bullish. This looks lower. I talked about it in last week's video. It broke down and didn't follow through, but it still looks lower. CAN, so short under 176, stop would be over 195. CORR. CORR is the weakest stock in the country. CORR and CAN probably are the weakest. Look at this. I mean, so weak. Crashed, hasn't been able to bounce at all. It just looks really weak. So it's got an hourly base breakdown. Check out the hourly. It's not the best I've ever seen, but under the base, stop above this pivot. Will it stop? I highly doubt it. If one gives it to 10.03, but it's a big stop also. It's about $1.50. It's actually slightly more than $1.50. CVI is a weekly sell setup daily breakdown. So this is another energy stock. And notice the weekly. The weekly chart looks really good. So short right here, stop would be right here, and then target the prior low. Okay? On the CVI. Triple D looks like a core short. Triple D looks really weak. That's the weekly time frame. Here's the monthly. Just looks lower. Here's the 4-stage cycle. It's very clear on triple D. See it right here? And so when it starts to go back up, that's the transition A play. That's what I was referring to on the PRTK, the last one we talked about. But PRTK doesn't have as nice of a 4-stage cycle. Here's the PRTK. It probably does, but not as clean. See it? It's not as clean. Up, down, and then up maybe. But it's not as clean. The triple D shows it very clearly. So you get that boom and bust always. And so it looks lower at this point. Look at this. It tried to go higher a couple times, and now looks lower to probably to about, wow, back to $1, $2 or so. So I like it. If you look at the daily chart, I like it as a sell setup under 673. Stop would be over 708. So it's about a 40-cent stop. It's less than a 40-cent stop. Okay. ERII very weak, gap down, and then has a 1, 2, 3. So short under 680, stop over 718. Short, and then target would be this bar's low, around 610, 615. FSLY, I'm not so sure. I haven't shorted the FSLY yet, even though I've been watching it. I thought I missed it last week when it had that big red bar, but so far it did not follow through to the downside. So an idea on the FSLY would be to short it under 84.20 on Monday. But the fact that it didn't follow through to produce any follow through to the wide range red bar makes it a bit more questionable. So FSLY is tough. It's a climactic sell setup. I'm staying away from the shorts as much as I can. For example, I just have one short right now, so on open position. But FSLY, I like it as a climactic short. It's just that it's proving to be too strong. This reminds me a little bit of the W. Remember when W skyrocketed? Look at this, from 25 bucks to 200 and is it from $21 to 200? And did it ever drop really? Not very much. I did short it here. I did short it right here. It was an official play. That was the only time I did it. But did it crash? No, not really. So the FSLY might come in a little bit. If it does, maybe to 70 bucks on the FSLY. NBLX is an oil stock and short under $8. Here's the hourly chart. It's a base breakdown. Looks good. And daily breakdown and weekly sell setup. It's similar to the CVI, but better than the CVI. In my opinion, better than the CVI. The SCS is a weekly sell setup. Daily 1, 2, 3. SCS, I think, so far this month, I'll log on to my account right now. So far this month, this was my best play. I mean, when I say so far this month, today is July 3rd, and so we've had only 2 days this month. So, but this was my best trade on Wednesday, right? So yesterday was Thursday. On Wednesday, when it gapped down, this was a nice trade. I'm just gonna opening my account right now. So here it is. It's opening. There it is. It's opening. So so far this month or the last week, SCS was actually my best trade. The last, the 2 days so far in July, I made 6,600 bucks. So I like it short as a 1, 2, 3, as a swing trade in this case, as a swing trade under the base, stop above it over 11 bucks. I like it a lot. TLRY, it was on last week's video as a short. It's triggered already. I didn't do it, but it still looks lower. TLRY Looks lower under $7. Okay, looks very good. Didn't do it. Kind of wish I did as a short under the base. The entry for it would have been under 8, so I would already be up $1 in the money. The thing about shorts, you know, is I'm having to cover quickly. Like, you know, I was in the CSII last week. I covered. It was beautiful. Target was down here. It still made 1.5 hours. It made $1,500 basically, but I had to cover it. It's coming into a sell setup now. MYGN made about 60 cents, I think, but I had 65 short, but I had to cover it here. Otherwise, I would have, you know, I would have given back. No, not everything, because my entry was at 11.95. But the point is, the shorts, they're not going very much. They go a little bit and then they go back up. So I'm having to cover them all the time, quickly, without making that much money. But that's the issue right now, because the market is so bullish. And this is why I'm shying away from a lot of these bearish setups, even though I like them just as much as I do the bullish setups, if not slightly more. But they're not making much money, so I'm trying not to take, you know, not to play them very much. So I'm being very picky with the shorts. I picked a lot more longs for Monday than I did shorts. Okay, Workhorse, that's a parabolic acceleration. It was a breakout. The best tops, the best blow off tops come from uptrends that accelerate. Okay, so this is coming from a sideways trend that accelerated. Still, I think this comes in, but will it fall apart? I don't know. I don't think so. So I'm waiting for it to take out, to give me a tight stop, like a doji bar, entry under it, stop above it, but that's not a very tight stop. I mean, that's a huge stop. Okay, entry would be under that bar's low, under 1975, stop over 22.90. That's a $3 stop. That's a big stop. I wanna get one of these bars. See this bar, something like this, or these small bars to play under short as a climactic sell setup. And that, my friends, the W, by the way, is okay long as a 1, 2, 3 for next week. But because it's up so much, I'm going to pass on it. But this is very similar. W is very similar to the ATVI. It's 1, 2, 3. It's similar also to the EQIX. It looks good. It's on my daily watches for next week. But I wasn't going to share it with you because it wasn't my favorite. But it honestly looks good. Over the base right here. Stop right here. Okay, on W. So with that said, I hope you enjoyed today's video, and as I said, I would appreciate it if you hit the like button if you found benefit, and if you have any questions at all, reach out to our customer service team. They can always forward your email to me at info@t3live.com, info@t3live.com. Happy Independence Day, happy holiday to all, and I'll talk to you next week. Okay, everybody, take care, and I'll see you soon. Have a good one.